Larsen & Toubro's earnings missed analyst estimates in the December quarter as order execution remained muted, but the company maintained the 10 to 12% order inflow growth guidance. Darshan is standing by with the numbers and his analysis of what he made of the numbers and the commentary. Darshan, what is your thesis?
Yeah, so my thinking is the numbers came in below estimates. The revenue growth expectation was 10%. They've done it at 6%. I was quite surprised with the order inflow number that came out. But first, on the number front, profit growth of 15%, and that was on account of lower taxes this time around. So that is something that probably aided the taxes. But on the revenue front, yes, it was a disappointment. But on the order front, it was a surprise. The other aspect is the EBITDA and the EBITDA margins. Margins coming in at 11.4%, so that's decent. EBITDA growth coming in below what was anticipated. So that's the trend that we're seeing in as far as the financials are concerned. Now, what were the factors at play? First of all, higher employee and sales costs hurt the margins of the company, and lower other income this time around and higher finance cost that dented the profit. What helped the profit was that the tax rate was much lower at 22% versus 33%. Now, the important factor is the order inflow. I was quite surprised with the order inflow that they've come in this time around. So they've come in with order inflow of almost 41,500 crores. So the ask is very high for the fourth quarter. So that's the trend that we've seen on the order inflow front. As far as the guidance is concerned, they maintained the revenue guidance of 12 to 15%. Now, what this means is that they will need and the order inflow guidance of 10 to 12%. On the revenue guidance, what I can say is that they are confident of meeting it. But remember, in the first 9 months, they've done their revenue growth is 10%. So the ask rate is very high for them to do and garner revenues in the fourth quarter. While they have managed to get in orders, at least on the infrastructure segment, the revenues came in much lower. Now, the guidance as far as order inflow is concerned, the FY20 guidance, this was the guidance on a 10% to 12% growth. That is what they have said. So they've done close to almost 1,28,500 crores. That's the order that's coming in. Now, what they need is, since they have maintained the guidance, is anywhere between 66,000 crores to 70,000 crores in the last quarter. So while they managed to come out with order, the ask is very high for them in the fourth quarter. I'm not saying they can't do it or they will not be able to do it. The management sounded pretty confident, but in a sluggish environment, it will be interesting to see if they do it. Yes, well and good enough for L&T, but at this point of time, it looks like a tough task for L&T. Now, if you take a look at what happened in terms of order inflow and revenue, the infrastructure revenue or margins were at 6%. Despite the orders growing significantly, the revenue growth was down 5% and the power revenues were down 23%. So there are two large components that they have. If that is not firing in terms of the revenue, and infrastructure obviously is the largest, and that is why when the core business is not performing, that gives they may be able to get in a lot of orders in the infra segment, and that is why the order flow boosted up. But if revenue is not coming in on the infrastructure problem sector is a concern. The others did well. Heavy engineering, defense, hydrocarbon, they all contributed to the revenue, but the order inflow was clearly missing there, and majority of the revenues came in from the other segments. These are the other listed entities that they have: the IT businesses, Mindtree, L&T Infotech, L&T Tech, L&T Finance on that side. So all of them added to the revenue. But if you take a look at the numbers, the core performance that L&T has certainly was weak this time around.
Darshan, just one question. So, one, that they need nearly 4.5 months worth of order inflow in 3 months, which is one thing. Two, is there any indication that they gave about whether the international orders will help them fulfill this tall ask, or would it be some optimism on the domestic front?
Yeah, so they said both of them. This time around, the order from the international business was decent. Their commentary was, I don't know, I was I was listening to the press conference. Somehow the management said they were extremely confident of meeting both these guidances, even the margin guidance. But it's a tough task. What I can say is that in the last 7 years, only once has L&T managed not to cut the guidance and meet the guidance, and that was last year. In the last fiscal, they did FY19. Apart from it, they've always managed to cut the order inflow guidance in the second or third quarter. This time in the third quarter also, they haven't cut the guidance on the revenue side or the order inflow side, which gives an indication that probably the management is confident. That they will be able to somehow garner orders. Getting orders, probably they will be booking some of the orders, but whether the revenue comes is important.
Okay, so they haven't quite cut the guidance, order inflow guidance this time around compared to the other previous few years, which is a good sign. But whether it translates into revenues or no is a question mark. Okay, Darshan, thanks so much for putting that into perspective.